Hey everyone, and welcome back to Talk Tickers. We're diving headfirst into Coupang's Q3 2024 earnings call.
Ooh, Coupang, the Amazon of South Korea.
That's right. And this earnings report, oh boy, is it jam-packed.
Yeah.
So we're here to break it all down for you.
Make sense of it all.
And, of course, gotta say it, this is not financial advice.
We're just earnings call enthusiasts, not financial gurus.
Uh-huh. So let's jump right in revenue. Coupang's up 27% year over year.
Yeah, which is super impressive given how shaky the global retail scene's been lately.
It really is. And even if you back out their recent Farfetch acquisition, they still managed 20% growth.
And that's their 14th quarter out of 15 hitting that 20% mark.
They're on a roll.
Yeah.
And here's the thing. They still haven't captured the majority of the Korean e-commerce market.
Nope, tons of room to grow.
Now let's talk customers. They added 11% more active customers.
But the real story is how much their existing customers are spending.
Oh yeah, they're spending more than ever.
Loyalty. Coupang's figured it out.
So what's their secret?
Well, their WOW membership program is a big part of it.
Like Amazon Prime.
Oh, it's way more than that. Free shipping, free delivery, free returns, even free content.
Wait, free content?
Yep, movies, TV shows, the whole shebang.
Wow. So WOW members must order a ton more.
9 times more often than non-members, and even the most loyal WOW members are still increasing their spending.
So they're showing you don't have to pick between amazing service and massive selection.
They've got both. Like with their RLUX platform, they're bringing high-end beauty brands to everyone. But with rocket delivery speeds and fancy packaging...
Talk about raising the bar.
And don't forget about FLC, their third-party logistics service.
Oh yeah, FLC unit sellers volume, all up over 130% year over year.
It's exploding. They're building the Amazon of logistics in South Korea.
Okay, so we've got the growth, the loyal customers, the innovative offerings. But what about those new ventures they're investing in? Like Eats Taiwan and the Farfetch acquisition.
Well, Farfetch is already nearing profitability.
Ahead of schedule.
Crushed it. But Eats and Taiwan are still early stage and burning cash.
Classic Coupang, play the long game. Okay, let's talk profitability. Margins are important.
Their product commerce gross profit margin is up to 30%.
Nice. But I did notice a slight dip quarter over quarter. Should we be worried?
Nah, it's just seasonality and investment cycles. The long-term trend is still up, and their long-term adjusted EBITDA margin goal is over 10%.
So they are serious about profitability.
Okay.
All right, to recap, Coupang's got impressive growth, loyal customers, and they're innovating like crazy.
But that brings us to our favorite part. This is not financial advice.
Where we throw out a wild but plausible trade idea.
Yeah.
So picture this: Coupang spins off their FLC business into its own publicly traded company.
Ooh, like Amazon and AWS?
Exactly. It could be huge.
Pure speculation, of course, not investment advice.
Just something to think about. Always encourage you to do your own deep dives on Coupang. There's always more to discover.
Who knows what they'll do next?
Back again to Talk Tickers.
And we're still knee-deep in Coupang's Q3 earnings call.
Time to break out the magnifying glass. Last time we were amazed by their growth, swooning over those loyal customers, and of course geeking out over those innovative offerings.
And who could forget that FLC spinoff idea?
Oh yeah, pure speculation, but fun to think about.
Definitely. But now, let's get into the Q&A.
Analyst rapid fire time.
Where the real insights hide.
Okay, so first up, one analyst asked about the big drop in losses for their developing offerings segment.
Especially Farfetch.
Makes sense. That segment's a mixed bag, so they wanted to know what's driving the improvements.
Right.
So Coupang CEO Bom Kim, he mentioned that the timing of expenses for those ventures can be a little lumpy quarter to quarter. He didn't give any specific updates for Q4, but he did say he's happy with how Farfetch is progressing, especially hitting near break-in profitability ahead of schedule.
That's awesome.
It is. But Kim also said there's still work to do to stabilize Farfetch.
So they're not quite popping the champagne yet.
Nope. Still baking that cake.
Gotcha.
Another analyst was curious about the jump in operating expenses, specifically those related to technology and automation. Yeah. Were those increases just temporary or a sign of a bigger spending shift?
Right. Because tech investments can be pricey.
So is it sustainable?
Well, Kim assured everyone that these investments are part of their long-term plan to build a super efficient and scalable operation.
Okay.
He said the higher percentage of revenue going towards tech and infrastructure this quarter was just a timing thing, not a structural change.
So no need to panic.
Exactly. And plus, Coupang doesn't capitalize its tech investments, meaning those expenses hit their income statement right away.
So they're being transparent.
Yep. And if you look at their track record, Coupang's really good at squeezing value out of those investments over time.
That's reassuring.
They expect those operating expenses to become a smaller percentage of revenue as they scale.
Music to investors' ears.
Definitely. Now, there was also a question about their advertising business.
Oh, yeah. That's a big moneymaker for companies like Amazon and Google.
Billions. So analysts wanted to know if Coupang can replicate that success. So Kim confirmed that ads are a key focus area, and things are going well, but he did say that ads are still a pretty small part of their overall revenue, much smaller than those tech giants.
So they're not quite an ad powerhouse yet.
Not yet. But they're taking a measured approach, building a unique and valuable advertising platform.
This is not just throwing ads up everywhere.
Nope, they're being strategic.
I like that.
One analyst even noticed a marketing campaign that seems aimed at attracting international sellers to use Coupang's FLC service.
Oh, Coupang going global.
Maybe. Kim didn't deny it. He said they're always exploring ways to expand their offerings.
So FLC could be their global gateway.
Possibly. Now let's switch gears and talk about product commerce margins.
All right. Margins.
Margins. One analyst mentioned their strong margin expansion over the past few years.
They have been impressive.
But they also pointed out the little dip this quarter.
Right. Was that dip a cause for concern?
So they asked if Coupang expects that margin expansion to continue at the same pace, speed up, or slow down?
Big question.
Kim reiterated their long-term adjusted EBITDA margin goal of over 10%.
Okay.
And he said they see tons of room for improvement across their whole business, leveraging tech like AI and automation, expanding their higher margin offerings, streamlining operations.
So they're not slowing down.
Not at all. Another analyst zeroed in on FLC and its role in their margin expansion plans.
Yeah. Will FLC be a bigger contributor next year?
Right. It's growing so fast.
So could it be their secret weapon?
Well, Kim was a bit vague on that. He didn't give specifics about FLC's impact on margins next year. But he did say that FLC is still early stage and will continue to be a major part of their growth.
So maybe not the dominant force for margin expansion just yet?
But its influence will probably grow as it matures.
Okay. Now, one analyst wanted a breakdown of the losses within their developing offerings segment.
Makes sense. They want to know which ventures are doing well and which ones are lagging.
So what did Kim say?
He acknowledged that Farfetch has made great progress, but there's still work to do. He didn't give specifics about the margin mix within developing offerings in Q3. And he didn't give explicit guidance for 2025 either.
Classic Coupang, keeping the suspense alive.
Right. But he did promise to share more about their 2025 outlook next quarter.
So let's wait and see.
Patience. Now let's talk about Eats, their food delivery service.
Yay.
Analysts pointed out the improved losses this quarter and wanted to know what's driving that improvement.
Right. It's a competitive market.
They were also curious about Coupang's market share in South Korea and their progress in expanding their food delivery network.
So how are they stacking up against the competition?
Well, Kim said the overall improvement in developing offering losses is mostly due to Farfetch.
Okay.
But he did say that Eats is seeing a strong response from customers.
So people like it.
They do. But he emphasized that Eats is still early stage. And he didn't reveal any specifics about market share or how they're expanding their network.
They're keeping their cards close to their chest.
They are. He basically said they'll give updates when there are meaningful milestones or developments.
Under promise and over deliver.
Exactly. Now let's move on to Taiwan.
Another market Coupang's trying to conquer.
Analysts were curious about their progress, their market position, and how they're tackling those quality of service issues that have been a problem in Taiwan.
Yeah, it's a tough market.
So how will Coupang succeed?
Well, Kim is very optimistic about Taiwan. He's excited about their progress.
That's good.
And he highlighted their ability to use their Korean expertise and infrastructure to scale efficiently. So they're bringing their A game.
They are, but he acknowledged that it's still early, and they're sticking to their disciplined investment approach.
Okay.
Meaning they won't ramp up spending until they're confident.
Smart move.
He also didn't give specifics about their market position or quality of service initiatives.
Keeping those strategic moves secret.
For now.
Okay, Talk Checkers fam. We're wrapping up our Coupang earnings call deep dive. We've covered their growth, their strategies, their plans for the future.
Triumphs, challenges, and even that wild FLC spin-off idea.
Oh, yeah. But now it's time to talk about the challenges ahead. Because even a giant like Coupang faces hurdles.
Definitely. The analysts were especially curious about Coupang's efforts to boost operational efficiency, especially with costs going up.
It's a tough balancing act, investing in growth while keeping costs under control.
Right. Coupang admitted that the current economic climate is making things harder, putting pressure on their margins. But they emphasize their commitment to optimizing costs and using technology to become even more efficient.
Squeezing every penny.
Yep. And they're not just talking about it, they're actually doing it. Exploring ways to cut costs, like optimizing their real estate and finding ways to reduce those capital-intensive investments.
Freeing up resources for higher margin opportunities.
Exactly. And remember, Coupang has a history of overcoming obstacles. They've consistently surprised everyone and changed the e-commerce game in South Korea.
So yeah, there are challenges.
Yeah.
But I wouldn't underestimate Coupang.
Me neither. They're always pushing the boundaries and finding new ways to win.
Well, that brings us to the end of our Coupang earnings call deep dive.
We've covered a lot: their financials, their vision, their challenges.
Hopefully you now have a better understanding of Coupang, what they do, what they face, and why they're a company to keep an eye on.
As always, do your own research. Coupang's story is just getting started.
All right, folks, that's it for this episode of Talk Tickers. Thanks for joining us.
And one last time, this is not financial advice.